moderator of this panel always brings me joy. In a world of cynicism, of ego, of too many machos, she changes the atmospheres with smiles and insights also. She is the country lead in Romania for the Recursive and has more of 10 years of experience as a storyteller. And she wants the local community to share its narrative and forge connections among the regional pioneers and proper CE in the global spotlight. Everybody, a round of applause for Elena VRABIE. Thank you, Elena, for being here. Yes.
Open? Can you hear me?
Yes, now it's open.
Now it's open. Awesome. If you can hear me in the back, join us. I'm kidding. Thank you so much. Thank you for joining us and keeping up with us with the agenda. I'm going to call the following speakers to the stage to share insights with you about the VC and PE market. Alin STANCIU is a partner at Catalyst Romania, one of the oldest local VCs and the only one with a second fund of 50 million euros. Let's give him a warm applause. Come on, let's. Vedran BLAGUS is the principal at South Central Ventures, a Western Balkans VC fund managing over 100 million euros in assets under management, and who is currently investing from the third fund that was raised 2 years ago. Congratulations. That's, yes, wherever you want. You can go there. I'm going to sit here. So this chair is for me. Next, he is a managing partner at Euroventures, a Hungarian pioneer in the VC world, as one of the oldest projects in Europe, launched in 1989. That's a good year. I was born in that year. And he's advising 5 investment programs of over 180 million euros. He's Peter TANCZOS. Congratulations for joining us. So next, she is an investment associate at the Resource Partners in Bucharest, Romania. This is a private equity investing firm focusing on Central and Eastern Europe's consumer and consumer-related industry, which has invested over 400 million euros in companies from Poland, Romania, and the Baltic states. Miruna, POPA, join us on stage, please. He is an investment manager at BrightCap Ventures, an early-stage Bulgarian VC with a 25 million euros first fund. He has in the portfolio around 20 investments and 4 exits so far. They are currently raising a second fund with a target of 60 million euros. Join us, Roumen, JORDANOV. Last but definitely not least, he is managing director of Endeavor Romania, the local chapter of Endeavor Global, for those who don't know, a community of, by, and for high-impact entrepreneurs with a global VC fund named Endeavor Catalyst, now at its 4th fund of $290 million. Mihnea, CRâNCIUN, join us. Thank you. I'm going to share this mic here so everybody's has a partner. Thank you for joining, gents and lady. Now, to warm up, I want to keep this dynamic, and please pass the baton. Don't keep the microphone. So, let's start with a warm-up question first. How would you describe the current regional tech landscape in your countries versus regional? 3 words. Who has it?
More capital than ever, I'd say. So we're in Western Balkans, a bit slow, and I guess more than ever funds present investing right now.
This is local or regional?
Both. So I'm based in Croatia. We're investing in Western Balkans. I'd say Croatia and Slovenia are actually quite positioned quite well at the moment.
Mm-hmm. Okay. Next.
I could say adaptive. Trying to be resilient, but still innovative. And that's both Bulgaria and the region, I think.
Mm-hmm. It's interesting how you see it. Others?
I will speak a bit from the perspective of a PE who invests in companies not necessarily tech, but right now, ever more so, we regard the tech angle as much more attractive. And it has become a given for companies to already be digitalized and to have automation in the processes. So for us, I would say the tech angle has become mandatory.
Thank you. Gents? please join us.
I'll take over.
Yes.
We as tech investors specialized, we see a lot of disruption in the startups. So that's one thing, and that's somehow related to all the buzz with the AI. So disruption, maybe transformation. We see a lot of transformation in the traditional industries. And I cannot accept, let's say, challenging. Because nowadays it's challenging to fundraise, it's challenging to reach economic targets and so on.
So a word is I hear you repeating is a challenge. It's challenge. It's good that we're having this conversation. There's so many of us that this is a work group. Please.
3 words. We are regional investors, so this is for the region. Yeah, I think it's still vivid, it's still overconfident, and still overpriced.
It's the right time. Go, Mihnea.
I need to say something different from everybody. I think it's very dynamic. It's vibrant from this point of view. It's dreamy in the sense that it's full of dreamers, but that's not bad. And it's quite early stage, which says a lot about the fact that there is quite a lot to do and quite a lot of work to be done on this ecosystem. And I'm talking about the region here.
Yes, the idea is to talk what we have, what we see is successful maybe in our neighborhood, maybe solutions that we can bring here, is to share your knowledge, your experience, your thought leadership, and see where we can collaborate. So, to get to know each other better, I want to focus a little bit on your investment thesis, or about the process of your investment committees. To see how are you developing it now, and if there's a difference between how it was used to in the beginning, how you used to do it in the beginning, and now taking into consideration everything that's happening in the region.
I'm happy to jump in,
Yes.
because I just learned that you were born when I started this, so it's been 30x years. There has been a development in that, and I think our investment committee was much more remote in the process at the beginning. And now it is such that one of the investment committee members is there from the first day when we develop a relationship with a portfolio company. The investment committee first listens to the pitch of that investment committee member before we sign the term sheet. And the team of the portfolio company makes a direct presentation to the investment committee before the investment decision is made. So this is something which develops a partnership with not just one member of the investment committee, but the whole investment committee team.
Thank you.
Look, in our case in Catalyst, we have not changed dramatically the way we're assessing companies. What I'd say is that we follow the same thesis, like looking always for good teams, traction, and of course good technology. What we did in the last couple of years was that we have engaged more, let's say, external expertise. We're agnostic because you have to be agnostic if you're running a fund in Romania. You cannot specialize in one vertical. So we cannot be, let's say, experts in all the fields. So that's why lately we have engaged more and more expertise, and usually even in the first assessment stage or DD, and then going back after the investment to the company and staying with the company as, I don't know, board advisors or so on. So that was one change we did.
Is it from experience locally or outside experience?
It's locally because we've done most of our investment in Romania. We have one investment in Serbia, actually the founder is among us. But we're doing the same with all the portfolio companies.
Thank you. Baton, yes?
I would name 2 changes. So first of all, this one relates to the funnel of the companies that we're looking at. So we indeed focus on consumer and consumer-related businesses. However, we invest from our current fund tree into companies who have a consumer touch point at any point in their life cycle. So we are looking at a wider spectrum of companies, even, let's say, equipment manufacturing, even though in the very standard definition of B2C, this would not usually fit in. And the second change, just to capitalize on what Alin is saying, is that our DD process has become much more thorough. For the first thing that comes to mind is that ESG due diligence has become something that is mandatory when looking at an investment. So I think also the depth, but also the range of the DD has advanced from one fund to another.
Thank you.
In our case, the thesis has not changed since we started, i.e. 2011. That's when the fund started. As the community is actually 26 years old, but the fund, the investment part started about 12 years ago. The thesis has not changed, but there's a big element of distinction that we have as compared to other funds, actually to the funds present here. A, we are a global fund. B, in order for us to invest, a company needs to have been selected into the community, and there's a selection process that we follow. So if you're not a company that is selected, you're not an endeavor entrepreneur, we cannot invest in you. Otherwise, the thesis is the same, is rules-based. It has to be an endeavor entrepreneur. It has to be around over $5 million. It has to be around led by an institutional investor. And we never invest more than 5% of a round, and we never put a ticket bigger than 2 million. So we have made so far, out of the fourth fund, out of the, this is now the fourth fund that we have raised. Together we have about 300 investments across the world, only in endeavor entrepreneurs. So.
Yeah, I agree with the colleagues. I mean, we're being a bit more diligent in the process, plus we're kind of involving the rest of the team in the whole process. There's always a deal champion kind of doing that, but involving everyone pre-term sheet doing that. But maybe one additional thing that we also start doing more in the past 2 years is, I guess, talking more to European later stage VCs. So we are early stage, seed, late seed investor. So in a way, we're trying to figure out, what are the trends, but I think most importantly, what are the prices in the future rounds. So we don't want to kind of overpay it, because kind of the rounds have, the valuations have gone down. So talking to Series A, B, mostly A and B investors, just seeing what's the market sentiment is something we're doing pre-term sheet or giving any valuation to the company.
Can you share some insights? What have you found out that supported your change?
Valuations have gone down, and basically we had to adjust to that. So usually something what we invested maybe like 3 years ago, like the valuation at a seed stage, is now somewhere a bit like the Series A investors are paying now. So I guess we overpaid the price a couple of years ago, which we're having challenges at the moment with some of our companies raising additional rounds. So they're either raising at the same valuation with double the better results. So we kind of had to adjust to that. I think this is a tough topic we usually have with the founders, that it's not how it used to be 2 years ago with the pipeline companies, but as well as portfolio companies which are either decreasing the round or decreasing the valuation.
Thank you.
Our motto at BrightCap is global founders and local engineers. It hasn't changed after 5 years since we closed our fund 1. We always try to invest in defensible solutions, differentiators. I don't think we've changed anything in our selection criteria due to the new economic environment. We always try to do reference checks, also hear the opinion of experts in the different verticals. I don't think we've changed anything since 5 years until now.
Thank you. Following up with I heard due diligence, and it's valuable for any investor. What can you tell me about your process of vetting companies, of due diligence? How has it evolved? What are you paying attention? What's a trigger? I know it's a challenging question. You don't want to give too much from what's happening in-house, but I'm curious about how has this process evolved, and what can we learn? What can other companies learn, or the new generation learn that wants to develop VCs?
I think here again, we got more personal over the years. So now our due diligence necessarily involves reference calls to key customers, and actually going as far as listening to pitches to real customers. And if not existing customers, then finding people in our network who could be interested in the services or the product of the company, and then organize an actual real life situation where we see management in action. And hearing direct information from the people who are buying from the company, you can't have a more valuable source for due diligence. So this is what we've been doing for the last 10 years or so, and finding that this is particularly useful.
I'm curious, sorry, how do entrepreneurs view this, the more hands-on right from the beginning?
I have to admit, in some cases they are surprised, and they think this is a kind of raping their personal space, and looking at it as also as a confidentiality issue. But I think we have the confidence now to argue that, look at the many companies we've worked with in the past, and I think that's the most important thing, that this reference thing and personal should work the other way as well. So even before we ask such a kind of really confidential thing, we tell them, talk to this, that, or the other person who worked with us for 5 years, 10 years, who did work how much, and ask them how was the relationship. Ask them if it caused any trouble with the customers. And then if you're happy what you hear, let's go ahead. If not, we're not the right partner.
I mean, we have that big portfolio, but maybe like 25, 30 companies. But I'd say for each of the company pipeline that we go pre-term sheet, we engage at least 2 of the portfolio companies in the similar industry to give us a feedback, maybe some industry experts outside that. But next to that, I think in terms of due diligence, I'd say we're doing a much further process of the exit scenario, which is always very hard to kind of project, how it's going to be in 5, 6, 8 years. But everyone's, we always ask the founders, who you're going to sell to, what price, and we do much thorough industry and market research and saying, are they actual buyers? Can they actually pay that price? And then, just doing our own, let's say, a value progression, and can we actually, get any money back from the investment?
I would add on that, because I think that our commercial DD has become, this is something that we focused on for the entire period since we are around. But right now we have extended it even to the period pre-MBO. So we will have expert calls with people who are specialists in the industry that we want to invest in order to understand the competitive landscape, the key players, the risks and the headwinds of the vertical that we are looking at. And with the advisors, I think that our relationship with them has evolved as well. Probably advisors have also become much more sophisticated and more tailored in what Ps and VCs expect from such a commercial DD process. And we have also learned to tailor our scope of work to what we need. So let's say when we're looking at an industry, naturally we will look at the growth rate of that specific sector. And there were cases in which the first draft of the commercial DD describes the trends, the sector, but fails to quantify a growth rate, which we would actually then use in our model. So starting our initial conversation with the advisors with that in mind makes it easier for both parts to collaborate.
All right, it's obvious that each one of us or each one of our teams will put more scrutiny when analyzing a new opportunity. That's for sure. But I was thinking on what Vedran was saying, and we do this kind of, in a way it's funny, we do this kind of exercise with some potential new opportunities. Ask the founder, okay, where do you see your company in 3 years or 4 years from now? And he's always saying, okay, I see my company making 20 million and valued at 200 million. All right, then what's the growth rate you need to perform to get to the 20 million in a 4 years time, for example. And this is always a bit of reality check with the founders, and it's a great tool to somehow sweeten up the valuation, for example.
The fund we have does not do any due diligence. It's a co-investment fund, so basically whatever terms have been agreed with the fund leading and the other investors, we just take them. But we don't basically jump without a parachute, because by saying that we only invest in companies that we have selected, we do a quite thorough due diligence process in selecting them. It takes between 3 to probably 12 months until we select companies, and we base our selection on a very rigorous process in which we mentor founders, we help founders, we try to understand them, and we triangulate at the end of this process a lot of views about what they do, about the industry, about their teams, about their ambitions, about capacity, and what we call the inflection point, which is the point from which we see their growth as being potentially exponential. So a lot of the due diligence is done before we actually invite them to join the Endeavor network. And then the fund obviously doesn't do more.
Do you see yourself like a traffic light? You know, do you raise bulbs for founders, for projects, when you go through the analysis process? Has it happened?
The traffic light has two lights, green and red. I would not want to. We focus only on the green thing. No, but I think it's a gated way of actually making sure you have a funnel, which is on one hand vetted by a very thorough, 26 years, as I say now, vetted selection process, and then you have the market, which is when we invest. So when the market is there and the market confirms the thesis, basically that's the sweet spot.
I don't think I'll say anything different from what my colleagues had said previously, but what we always strive at is to know our founders. 15 out of our 20 investments are coming from our own network, and we've been founders in our past, so founders do trust founders usually. Of course, if there is already commercial traction, customer interviews are a great tool to understand the product better, to see where there are shortfalls, and also experts in the different verticals help a lot in this process.
Thank you. So each period, each year, each season comes with challenges and opportunities. What do you foresee for early stage companies? What are, in your opinion, the opportunities and challenges in the coming year for the early stage companies in Southeastern Europe? And how do you plan to navigate them? I want to dive a little bit more into your process of how are you helping companies grow, go over hurdles, and find out also why do they want to work with you to go in that direction. So it's a loaded question. It's long. Thinking, pending.
Yeah, I mean, we've engaged with the newest fund. We have venture partners who are helping the founders kind of navigate the storm in the coming years. I'd say we are more hands-on. I mean, it's maybe wrong to say hands-on, but we have more regular meetings with the companies nowadays, helping them, either, it's from corporate governance to the financing and so on. Number 3, everyone's kind of having challenges raising additional round of financing in our portfolio, so we're more engaged on that part, talking to more funds than ever, interests, and kind of help them polish the pitch deck, the financials, the data room, and so on. And why they want to work, I'm not sure why. I mean, I guess we try to say we're the go-to investor in the Western Balkans. How we try to do this, I mean, we have 4 offices, so in 4 different countries, so we want to be for them, when there's good and when there's bad. And even though we're covering 7-8 countries, we're there on a, kind of a drive away from them if there's anything needed.
Thank you.
2 questions I think you had. What are the challenges?
And opportunities.
And why? Why us? Why face those challenges with us? I think unfortunately, a key challenge is geopolitical risk. Many investors don't consider South Central Europe as the place to be these months, these years. And then there is a long list which I don't want to repeat, which are usually there for these companies. And why with us? Actually, we asked this recently from close to 40 people we worked with in the past, why they thought was a good thing to work with us, if it was a good thing. And we were surprised to see that actually reliability is the key thing. Reliability in the sense that they know what drives us. So if you act upon your ambitions, that is something which helps a lot for an entrepreneur. If you know that you will act like this because you want to reach that, I think that makes you reliable. That makes you, in a certain sense, patient. But more importantly, in the life of an entrepreneur, there are so many parameters that are changing from day one to the other. So if there is a partner whose agenda doesn't change from year to year, but at least is clear for 5 or 6 year period, that is a very strong support. And I think that was the key thing they mentioned.
Somebody else wants to add? You can answer, or I can move to the next question.
No, I think that panel 1 focused today a lot on the challenges. I just wanted to quote Winston Churchill saying that optimists see opportunity in every challenge, and I think we're in the optimist game here, betting on these promising startups. How we help our founders is first by having a very diverse team. So basically every opportunity that we look at is looked from the entire team. And we have people that build technological software. We have people from investment banking. My background is in sales and customer success. We have a person who has been doing strategic consultants. So we try to help our founders in the full journey of their startups, from finding the product market fit, scaling, recruiting the right people, and using our network to connect them, because most of us studied and worked abroad, to connect them to markets, global markets like US and UK. Actually, 3 of our exits were exits to companies in the US, and this is our clear path for success for our companies.
Look, we don't have time to explain all the challenges a startup is facing, of course, starting from funding and so on. But I was thinking that the way we're trying to help startups is usually by sharing information in between our investee companies. So we're transferring knowledge from one to another. It's the same case as Vedran was mentioning. We have few offices. So that's usually helping a lot of startups.
Thank you. Yes. Anybody else? Do you want to join?
I would probably add to the challenges something that we've noticed across a wide range of companies that we've looked at, namely the lack of skilled workforce. And as I said, this is not just about manufacturing. This feeds into other areas and other departments of a company's staff. So I think that this is something that generally the CE region struggles with, together with the migration and the brain drain phenomenon. On the other hand, I think it will provide a great opportunity for businesses who favor a reconversion, a professional reconversion, and continuous learning. To your second question, how founders choose us, I think that, and this is probably something that is valid for all of us, it relies on word of the mouth. Whenever we are in an advanced process with a company, we always refer the founders to our other partners from the past, who are always happy to exchange their thoughts. And we encourage them to have a very objective discussion about how it was to work with us.
Thank you.
Just to add to what Miruna was saying, basically we see plenty of startups with very highly skilled people in technology, so engineers, but we really see missing the, let's say, the operator role. So if we're looking for a product marketing or, I don't know, product development manager or business development manager, that's a role that they could rarely find the right people on.
Understood.
Answering to the first question about the challenges, I think there are several dimensions that we see with all the businesses that we select, and most of them are somewhere between seed and Series A. This is the time, the sweet spot, and the right time for us to invest. And of course, at that stage, you have got a little bit of traction, you have got some sales, you have probably grasped a very good feeling of what the market needs, and you're basically trying to make a dent in that market. But where we see most of the challenges are in actually expanding what you're doing outside your home market or outside the market where you started. So we see a lot of potential, and this is where the network that we have becomes important, because being in 42 geographies, basically we can help these guys to find mentors, find partners, find investors, or potentially finding other entrepreneurs in the same areas or in the same field that they can learn from in other geographies. So learning from peers is probably the most important and underrated learning experience, and we try to stimulate that.
And that's the reason why we're here. Why do founders choose to work with Endeavor?
This is really interesting, and I think it's one of the answers that we hear most of the time is that we don't have an agenda. And when they say we don't have an agenda, is they try to say you don't necessarily have an investor hat, you don't have a pontificating posture, so to say. You're not telling us what to do. They want to work with us because we have a huge network of people who, like us, like to dream big and pay it forward. And they find here in this community really people that they can open up to, but also people that they can learn from. And this is the most important argument for which they want to work with us.
Thank you. Continuing to peel the layers of the onion, how I like to say, we touched upon personal keywords, we touched upon workflows, about due diligence and specific experience inside a team. There are many VCs in our neck of the woods, but globally struggling to raise funds. Others are closing funds altogether. What has been your experience so far, and what are your goals moving forward, especially for those raising current funds or that have raised recently?
I can share it was painful. We raised our fund 2 years ago, the first closing. I think it took us 2 years, approximately, even more for the first closing. Then we had second closing last year, the final this year, actually. I actually think we got it in the last moment. Now when I'm speaking to the other funds that are raising, primarily from our region, Western Balkans, it's extremely difficult for them to raise to raise a fund. I mean, EIF is now stepping in. If I talk about, for example, Croatia, EIF is coming here in Slovenia as well, where they're investing 100+ million. So I guess institutions have to kind of get the market, back active.
What do you think sealed the deal? What did you have?
That you closed the fund? I guess we'd have to ask LPs, but it's our third fund. When we raised first fund, they were looking at the results from the first fund, how it ended, what were the results. Plus, they were looking at the results of the second fund. So when we had the first closing of the last fund, the previous fund was at year 6, 7. And when the proceeds to the investors are still not going there yet. I mean, we're still kind of investing, co-investing, maybe hopefully selling some companies. So in that process, we did a couple of secondaries as well to sell some shares of our companies to show the back then investors that, hey, like we're returning money, you know, there's something happening in the market, you can get your money back and earn on that. So I guess that's it. So primary KPI for the LPs was how much money have we returned to the investors.
Thank you.
Very relevant question for us. We are currently closing our second fund, first close. Target is 30 million for the first close, 60 million for the entire fund. Our first fund closed 5 years ago was 25, with EIF being the anchor investor, I think a familiar team in the region. I think what would help a lot is what was discussed in the first panel, pension funds, more money being available from family offices which are not present in the region, from other corporate investments. Funny enough, we have all the private money committed already, but we are still going through the full process with the public money, but we hope to close in the beginning of next year and start investing.
Any struggles, any challenges, any lessons to pay it forward, to share the knowledge?
I think we were lucky to have returned actual money to our investors in Fund 1, which was for them a bit of an easier decision to go in also in Fund 2. Also people that maybe passed on Fund 1 are now a lot more willing to talk and sign commitment letters. So I think, and I hope that the hard work that we have put back when we were starting is paying off now. But of course, there will be challenges. We don't kid ourselves. Money is not easily available, so we'll have to work hard.
Maybe if I could share lessons learned, because you just asked. The first one, I mean, talking to the Western or US family offices was extremely difficult for us, because they do not know the region that well. So we were kind of selling the region, and I guess we weren't that successful in that. So they could either choose to invest in a fund in the US, a top tier fund, or us, and they chose them. That's number one. And number two, you also mentioned pension funds. For example, us in the Western Balkans, this was extremely difficult. They're not really keen in investing in VC funds. So trying to get money out of the pension funds was difficult as well. We unfortunately we did have them in the previous fund, but in this we unfortunately do not have. So I guess our lessons learned was we spoke to the private commitments we got was for the people like diaspora people, so people, Romanian or Western Balkans people living in the US or any other countries who invested in our fund, and then talking to maybe some corporates who were willing to invest. And number three, I mean, our anchor investors are institutions, so EIF, EBRD, IFC.
Just to add on that, I think this is one of our main concerns as well about the region, because I think everybody agrees that fundraising is difficult right now. We see that the DFIs are the ones who are keeping the PE scene in the CEE region alive. So basically EIF, EBRD, and IFC, like you said. So I think everybody is asking from the same pockets. And there is also a lack of new entrants on the market. American investors have been probably spooked out by the war and have become even more conservative with regards to the CE region. And even if they choose to invest, from our experience, they will go to large cap funds such as CVC, who have a very small allocation of 5 to 10% of their funds to this region via 1 or 2 companies. But for them, this satisfies their allocation criteria.
Collaboration, and this is the final question. We have, I was announced we have 5 more minutes. Collaboration is key in the innovation ecosystem and in the investment ecosystem. So these days, even more than ever. Is there an example of cross-border collaboration, and that has been particularly successful both for the investment firm, but also for the companies that you're supporting?
We are seeing it pretty much on a weekly basis, more or less. But to give a concrete example, we are seeing quite a lot of companies. Of course, everybody does. But because I feel Endeavor is a little bit early in Romania in terms of size of the companies, maturity, stage of development of most of the companies we are seeing, we started building a significant pipeline of candidates, which we try to help by providing probably 85–90% of what we do for our selected entrepreneurs, which really makes sense. But one of the examples that I would have is, we met a Romanian entrepreneur who raised a little bit of money from angels and had a very interesting thesis about getting listed as his primary objective when he reaches 5 million euros in revenues on the Romanian stock exchange, on the Aero stock exchange, which is this smaller division of the... and over the course of a number of interactions that he had with mentors from Endeavor, from Brazil, from Asia, from the US, he came up thinking, oh my God, I can do so much more than just that. So it's this type of collaboration between founders and people who can demolish basically the most important barriers, which are mental, mindset type of obstacles. So of course we promote as many interactions as possible, because only by getting to speak to people who have been in your shoes or have been in your industry or know your clients and know sometimes the market you aspire to be in, that's how you actually grow your founders. And by growing your founders, you are nurturing your investment eventually.
Thank you, Mihnea. We have time for one more answer, but I'm curious, have you, any of you, collaborated, worked together so far? Here up on stage? Talk about that. I want to hear that on a final note. How was it? How did you find the support? Why did you collaborate?
I have actually, because Alin is here, we're a number of the companies that are in their portfolio, we are also talking to them. And we are trying to see whether our network can help them scale beyond the markets where they are already in. So of course, it's mostly in VC that we work. But of course, these days, I think, it's not so much tech, is also whatever scales is important for us. So I'm thinking that, there is much more that we can actually do in this market with the funds. And in fact, most of the companies that we are talking to, we are selecting them based on the discussions we have with the funds that have already invested in them. So, there's quite a lot of collaboration in VC.
Yes, 1 minute, final minute. Thank you, Vlad.
Yes, I think that one thing that is actually stopping the process of collaboration is we have to work with institutional investors, and they come with certain conditions. As we're taking money from the Bulgarian government, we have to invest in companies that have added value in Bulgaria. And that's why we're here. We want to explore the Romanian market and explore ways to break these silos and actually be able to invest in the region and not only locally. We are discussing deals. We do have some co-investments with Romanian funds, but it's at a very low scale so far. We want to see that expand further.
We're happy that everybody traveled here to the local zip code. I hope to follow more synergies and discuss further with you in the next year, more and more collaborations. Thank you. Please, a round of applause for these amazing speakers.